Hello and welcome to this session. This is Professor Farhat. In this session, we would look at the Subservice Organization, and specifically, we will be discussing the Carve-Out and the Inclusive Methods. In the prior session, we touched upon those two terms, and I kept mentioning that we will discuss those two terms later. Well, guess what? Later is today. Carve-Out and the Inclusive Methods are related to the Subservice Organization. So what is a Subservice Organization? Let's start with that. Well, let's go back to my original example when I started to talk about a SOC engagement. And I gave you the example that my company, Farhat Lecture, is a user entity. We call this the user entity because Farhat Lectures don't have their own IT department. What we do is we use a company called Best IT Support, which is called the service organization that handles our IT system, our data, our IT needs. So Best IT Support provides services to Farhat Lectures. Now, I have my own independent auditor who's going to audit my company every year. Now, when they audit Farhat Lectures, they're going to audit my internal control over financial reporting. I don't have an auditor. This is just an example, just to kind of make the point. So when they audit my company, they're going to notice that I have my IT department. It's part of my company, but it's not really my company. So part of my controls are handled by an outsider, Best IT Service. So what is my auditors going to do? They're going to ask them for a SOC 1 engagement report. SOC 1, either a type 1 or a type 2. Ask them if they have a type 1 or if they have a type 2. If they have a type 2, that's great. It means there's the auditor of the Best IT Services audited their internal control over financial reporting, and they issue a SOC 1 type 2 report, which they're saying the description, the suitability of the design, and the internal control over financial reporting are operating effectively. If we can get a SOC 1 type 2, my auditor will be happy with that. And they can audit my company and rely on that SOC 1 type 2 report. Or let's assume I want to make sure that IT support wants to do what? I want to make sure that they comply with the trust services criteria. Privacy, confidentiality, processing integrity, security, so on and so forth, those 5 criteria. Well, I'm going to ask them for a SOC 2, and most likely, if I want to be sure, type 2 report. It means the description of those trust criteria, the control design, and the operating effectiveness of these designs are working properly. So I can do that. Or my auditor, if they're auditing me, they can ask for that as well, SOC 2 type 2 report. Now, so far so good. So this is what we learned up to this point. How about if IT support, Best IT Support, they could also rely on other companies. Let's assume IT support, they rely on a company called Best HR Services for their human resource need. So they don't have their own HR department. They outsource this to Best HR Services, and they don't handle their own cloud service. They outsource this. So here's what happens now. We have Best HR Service and Best Cloud Services are part of Best IT Support, just like Best IT Support is part of Farhat Lectures. What do we call Best HR Services, Best Cloud Support? We call them Subservice Organization. So IT Support is the service organization. The other organizations are serving. Who are they serving? They are serving IT support. They are serving the service organization. They are called Subservice Organization. So when conducting a service organization control engagement, SOC engagement, an auditor must sometimes evaluate services that the main service organization has outsourced to other companies known as a subservice organization. So the service auditor, now the auditor here of Best IT Service, they're going to have to might have to look at Best HR Services and Best Cloud Services. They may or may not. It depends on different factors. The criteria for considering a vendor as a subservice organization differ whether the engagement is a SOC 1, SOC 2, and SOC 3. So a subservice organization does not have to be an independent company. It could be a subsidiary. For example, Best Cloud Services could be a subsidiary of the Best IT Support. Nevertheless, it's a subservice organization. Now bear in mind, not all subservice organizations are relevant to SOC engagement, because for example, best IT support could have a third sub-organization, a fourth, many. They may not all be relevant to the SOC engagement. I just want to let you know this because we're going to have to determine whether they are relevant or not. So that's the point. And if they are relevant, what do we do with them? If they're not relevant, what do we do under those circumstances? And management determine whether the subservice organization is relevant. Which management? The service organization management will determine whether those sub-service organization are relevant, and if they're relevant, what do we have to do if they are relevant? What do we have to do when we're conducting a SOC 1 versus a SOC 2 report? And this is what we will discuss in this session. This is basically an introduction. The only thing that we added in this lesson is the concept of a subservice organization. Now we need to discuss carve-out and inclusive methods. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. Let's discuss first a SOC 1 engagement. So when do we consider a subservice company under a SOC 1 engagement? When do we consider a vendor? For example, here we have Best Cloud Services as a subservice organization to Best Payroll Services. So when would they consider Best Cloud Services as a subservice organization? Well, a vendor qualifies as a subservice organization in a SOC 1 engagement if the vendor services, the Best Cloud Services, likely relevant to the financial reporting control of the user's entity that rely on the service organization. Now we have to keep in mind, I always tell you Farhat Lecture is the user entity. Here, the user entity really is Best Payroll Services. So Best Payroll Services is relying, notice here the arrow is coming from Best Cloud Services to Best Payroll Services. So Best Payroll Services under those circumstances is the user entity. What does that mean? It means if the services at Best Cloud Services are relevant to the financial reporting at Best Payroll Services, then we considered the vendor a subservice organization. It means Best Cloud Services will be considered that. This means the vendor services have a direct impact on the financial accuracy and reporting integrity of the user entity. Well, if it is, then we have it's a subservice organization. Also, the controls in place at the subservice organization are essential for the achieving the control objective at the service organization. So the controls that the Best Cloud Services are implementing are essential so that the control over financial reporting at Best Payroll Services work properly. Well, if that's the case, then management will have to outline in their system description. And these controls help ensure that the subservice organization's activity align with and support the service organization control environment. So for our controls to work properly, the control at Best Cloud Services, which is a subservice organization, will have to be working properly as well. So this is a SOC 1 engagement. For a SOC 2 and SOC 3 engagement, similar concept, a vendor is considered a subservice organization in a SOC 2 and SOC 3 engagement if the services provided by the vendor are relevant to how report users understand the main services organization system in relation to the specific trust services criteria being applied. Remember, when we are looking at SOC 2 and SOC 3, we are looking at trust services criteria. What we are saying is this. If it helps the user understand Best IT Support, here Best IT Support is the service organization. Remember, the service organization here is the user entity because it's the user entity, and now Best Cloud Services is the subservice. Now, if it's necessary to understand the Best IT Support specific trust services criteria, in order to understand this, we have to understand the services provided by best cloud services, then they are relevant. This relationship implies that the subservice operation could impact how the main service control are perceived and evaluated. So really, we cannot understand the best IT support until trust services criteria until we understand best cloud services. Why? Because they are CSOCs. They are connected together. Combinations of control for assurance. In other words, they work together. Controls at the subservice organization, along with those at the main service organization, are collectively necessary to assure stakeholders that the service commitment and system requirements are met effectively. In other words, you have to look at both in order to understand the trust services criteria being applied. Also here, they are referred to as I mentioned, CSOCs, and are crucial in providing a comprehensive assurance that both the service and the subservice organization operate effectively to meet the required standard. The next thing we're going to discuss is how do we integrate those sub-services into the report, whether we do integrate them or not, and how do we do so. Again, we have two methods. We have the carve-out method and we have the inclusive method. Under the carve-out method, carve-in means keeping it out. Under the carve-out method, the services, it's not really keeping it out, but not really including it in the scope. You're going to see how. The services and controls of the subservice organization are not described within the main service organization system description and are excluded from the audit scope. So remember, we talked about the description and the scope of the audit. If we are using the carve-out method, we don't include the subservice organization description because they are being carved out. They're not part of the audit. Now, when do we carve them out? We're going to find out. But first, what do we do if they are carved out? Let's assume they are carved out, they're not included. So what are the steps here if we're using the carve-out method? Well, here's what's going to happen. We're going to identify and describe the services provided by the subservice organization. Hold on a second. You just said they're not included in the description. Yes, we're going to identify them. We're going to mention them and describe their services, but they're not going to be part of the description. Remember, we have the description, the control design, and the assertions. We're going to mention them, but we're not going to be considered as part of the description nor part of the audit scope. This is crucial for understanding the nature and of the outsourced function and the relevance to the service organization operation. So we're going to tell you what they are, but they are not part of the description, not part of the scope. How is that possible? Yes, we're going to tell you that they exist. We're not going to totally ignore them. Identify them. And we're going to tell you the expected control at subservices. Notice here, expected. What do we expect from them? Specifying the types of control that are implemented at the subservice organization. Yes, we're going to mention them, but they're not going to be part of the audit scope. They're excluded, and they're not part of our description. These controls are essential for working alongside the service organization control to ensure the achievement of the overall control objective. What could be some examples? Could be many examples. Any expected control at the subservice organization. Logical access. All companies will have logical access. Transaction processing, accuracy and completeness, and accurate reporting. Those are expected. Those are the expected control at the service company. We expect that those control exist. Now, do we expect and trust it? No, we're going to say we expect and we're going to monitor. Detailing the control used by the service organization to oversee and verify the effectiveness of the control at the subservice organization. We're not only going to tell you what they are, identify them, we're going to tell you we're going to monitor, but they're not part of the audit scope. This is the point I'm trying to make. This step is vital for maintaining overall control integrity and ensuring that the subservice organization activity align with the expected standard. So we do rely on the monitoring. That's all what we're going to say. So this method essentially carves out the subservice organization specific control from the service organization system description. So it's not part of the description. We're going to tell you what they do. We're going to tell you what do we do to monitor their process, what's their expected control, but that's about it. Relying instead on the disclosure of their nature and monitoring mechanism in place. That's it. They're not part of the description. We're going to tell you what they do, and we're going to tell you about what we do to monitor them. That's it. And this approach allowed the service organization to focus on the controls within its own operation. So when we carve them out, it means we're focusing our own control. We're going to tell you we're going to describe their control. We're going to tell you what mechanism do we use to make sure that they are using the control properly that are relevant to us. But they are not going to be part of the description of our system description. They are not part of the scope of the audit scope. That's it. That's what you have to know. How about the inclusive method or the inclusive methods? What do we do under the inclusive method? Well, you would assume we're going to include them. Yes. When engaging with a subservice organization, a service organization has the option to use the inclusive method for including the subservice organization control within the scope of the audit, within the scope of the report. So what we're doing here under the inclusive method, we're including them. And this method integrates and details the role and controls of the subservice organization within the main service organization system description. You notice here, we're going to have their information, detail of roles and control in the system description. Simply put, we're going to consider them together. So the SOC report would include a comprehensive description of the subservice organization contribution outlined in two main areas. Description of services. This element details the specific services that the sub-organization provides to the service organization. This is important to clearly define these services to understand the relationship and dependency between the service and the subservice criteria. Obviously, the reason we are including them because they are important. In other words, the best IT service here, the service organization, is the control at the best cloud services are critical to us. So we include them in the description. Description of services versus what? Versus clearly identifying and describing the services provided without including them in the system description. We don't include them in the system description. We just kind of tell you what they are on the side. They're not part of the system description. Although it says here's the description of services, but they are not included in the system description. Remember, we have one whole session about system description. We don't include them there. Now, what else do we have to do? Include them in the description. Also, we would include them in the system components of control. This includes a thorough description of the subservice organization's system elements and controls that are crucial in delivering these services. So these controls are assessed in conjunction together with the main service organization control to ensure they collectively together meet the defined control objective for SOC 1 engagement or fulfill the service commitment and system requirement for a SOC 2 engagement. They are important. These controls might involve security measures, process integrity, and other mechanisms necessary for maintaining reliable service delivery. They are important to us, therefore we are going to include them. Therefore we use the inclusive method. Therefore we have them in our description. Therefore they are part of the audit, included in the scope of the audit. How about when you have multiple subservice? When working with a multiple subservice organization, a service organization has the flexibility to choose different reporting method for each. So for example, notice earlier we had the HR as a subservice, we had the cloud service as a subservice. For example, we might exclude or use the carve-out method for the HR, use the inclusive method for the cloud service. It can use the carve-out method to exclude certain subservices control from the report or the inclusive method to integrate them. This allows the service organization to customize the scope of their SOC engagement based on the nature and significance of each subservice relationship. And later on, we're going to talk about the significance of relationship, and that's what's going to determine whether we include them or not. So the inclusive method in particular offer a comprehensive view of how combined controls meet compliance and security objective. Of course, they are combined, they're together, enhancing stakeholder confidence in the entire service ecosystem. So when you have the inclusive method, you're telling them about your control and the control at the subservice organization and how they both integrate. So for example, let's assume Cloud Tech Solution provides cloud storage solution to various clients, and they have two subservice organizations. Secure Data Inc. provide critical data encryption, and Backup Solution handles secondary data backup services. For the SOC report, here's what's going to happen. For the secure data, given the critical nature of the encryption for data security, Cloud Tech might decide to use the inclusive method. And guess what? For the backup solution, since the backup solution handles a less critical function and already has its own comprehensive SOC report, Cloud Tech opt for the carve-out method. And this method excludes the backup solution specific control from the SOC report, relying instead on referencing their independent SOC report. So notice the difference. We can include some, and not include the other. So when do we use, when the inclusive method is useful or preferable? Now we talked about, how to, when we include it, but when is it preferable? Well, I'm sure you kind of logically when. An inclusive SOC report tend to offer more detailed and comprehensive account, making it particularly beneficial in specific scenarios. What are those specific scenarios? Well, if we are relying on the subservice, if there's an extensive reliance, well, extensive services provided by the subservice organization, when the services delivered by the subservices are substantial and integral to the service organization operation, including detailed information about these services within the SOC report, can help provide a clearer picture of the overall system control and their effectiveness. Now, bear in mind, who makes this determination? Management. Management makes this decision, whether the services are extensive. That's one reason. And this makes sense. The more we rely on them, the more importance they have to us, the more likely we have to include them. Also, a lack of independent report from the subservice organization. If the subservice organization does not have its own type 1 or type 2 SOC. In other words, let's go back to this example here. If Best Cloud Services, they already have a type 1 or type 2, then guess what? We include type 1 or type 2. Otherwise, well, if they don't have type 1 or type 2 report, in other words, they don't have their own SOC engagement, then what we have to do, we have to include them. Then they have to be part of our report. So if the subservice organization does not have its own type 1 or type 2 SOC report available, incorporating their control and operation into the service organization can fill this gap. Because if we have type 1 or type 2, then we can use it, say that's that. Otherwise, we have to include them. This is crucial for users who rely on this report to assess the control environment. Also, if there's any limited availability for information, when information about the subservice organization control is not easily accessible through other means, usually through type 1 or type 2, then what we have to do, we have to include them. This way we give a full picture of what's happening. So when is the carve-out method preferable? Now we looked at the inclusive one, it's preferable. How about the carve-out method? Well, when implementation challenges, we simply cannot collect enough information about their control. In other words, we cannot have the inclusive method. If the inclusive method presents significant difficulties, whether due to the complexity, resource constraint, or other operational hurdles, and these challenges render the method impractical, then we're going to go with the carve-out method, maybe considered as a viable alternative, because we cannot have the inclusive method. So this is basically a necessity. It's not a choice. This method allowed the main service organization to focus on its own control without the burden of integrating and describing subservices control. That's one issue. Another issue could be the auditor independence issue. The carve-out method is also preferable if the service auditor lacks independence in relationship to the subservice organization. Because think about it, SOC 1 and SOC 2 are attestation engagement. If the auditor has any interests in the subservice organization, the auditor opinion is useless at this point because there's no independence. For an inclusive SOC report, the auditor must maintain independence from both the service organization and any included subservice organization. If this independence is compromised, it's not feasible to use the inclusive method. You can do it, but it lost all credibility. It's useless. So the auditor has to be independent. Remember, SOC is an attestation engagement. Also, when you have either a type 1 or a type 2 report, if the subservice organization has its own type 1 or type 2 report that adequately meet the needs of report users, there might be less necessity to include them. Simply put, you would reference the type 1 or the type 2 report. So this carve-out method allows reliance on the subservice own independent reports. And sometimes you cannot do it because there is a lack of a cooperation from the subservice organization. So if the subservice organization is unwilling or unable to agree contractually to be part of the SOC 2 engagement, because remember, SOC 2, you have to test the operating effectiveness. You have to do some testing. So the service organization may have no choice but to exclude them from the report. This situation necessitates the use of the carve-out method, as the service organization cannot include entities in the audit scope without their consent. We need their consent. Now, obviously, most subservice organizations, they will be happy to cooperate because you are a client, and if you want to keep their business, if they want to keep your business, then they're going to have to comply with this. But just Just to let you know that if lack of cooperation, you cannot have a SOC 2 report because you need to test the controls. Factor to consider when selecting the carve-out method. Remember, the carve-out method is, in quote, a little bit risky because you are excluding, okay? So factors to consider. If there's a significant presence of subservice functions, okay, we have to assess the importance of the tasks performed by the subservice organization within the overall service system. If the subservice handles a major portion of operational function, its exclusion from the report might lead to significant informational gap. So that's one thing you consider. If I'm carving them out, how about if they have substantial amount of involvement within the main organization, service organization? This is risky. This becomes risky. Complexity, services, and control. You have to look at the complexity of the services provided by the subservice organization and the sophistication of the control they implement. Now, if they're complex services with advanced control system, those are more critical to include in a detailed manner as their impact on the overall system integrity is substantial. So the more complex, the more information you want to provide. Dependence on subservice controls. If you are dependent on their control, you have to consider that. Consider how much the service organization ability to meet its service commitment and system requirement on the control of the subservice organization. The more you rely on them, the more you have to be going toward the inclusive method. If the achievement of key objective heavily depend on these controls, omitting them from the report could misrepresent the system effectiveness. Other factors you consider is the impact on trust services criteria. This is when it comes to a SOC 2 engagement. Identify which, if any, of the applicable trust criteria would be compromised if the control at the subservice were not effectively implemented. Well, the more criteria affected, the more crucial to consider including these controls in the scope. Also, you want to take a look at the availability of evidence from the subservice organization. You have to reflect on whether the intended user can access sufficient and appropriate evidence regarding the design in the case of Type 2 report, the operational effectiveness of the subservice organization control through other means such as independent SOC report, specifically for the subservice organization. See if there's other methods. If there are other methods, then that's fine. If there are other methods that the user can rely on, then fine, we don't need to include them. Then you can consider the carve-out method. So those are the factors that you have to consider when you're considering, I'm not going to include them. You have to look at those. And again, the more reliance, the more extensive, the more you rely on their control, the more likely you're supposed to include them. If such evidence is not readily available or sufficient, it supports a case for using the inclusive method. So if there's nothing available out there, then you have to include them. Let's take a look at this multiple choice question from farhatlectures.com. It's a straightforward, it's common sense questions, but if you cannot answer these questions or if you don't understand it, then you don't understand the big picture. So let's take a look at this question. FinTech services uses several subservice organizations for various functions. Which scenario would most likely require using the inclusive method for one of its subservice organization? Okay, so they have several. Which one do you think they need to include? The subservice provides seasonal landscaping. I would say how important the seasonal landscaping for either the trust service criteria or internal control over financial reporting. Without even reading the other options, I'm gonna take this one out because seasonal landscaping is not really, it doesn't matter what company, they're not gonna be relevant to the trust service criteria or internal control over financial reporting. The subservice handles secure online payment processing. Now I'm sure I can take out A and keep B because secure online payment deals with trust services criteria. Well, guess what? I want to include this trust services criteria. The subservice offers employee cafeteria services. They offer employee cafeteria services. I would say it's not as important as handling secure online payment processing. Between those two, between B and C, I will definitely choose C. The subservice provides office cleaning services. Similar to the landscaping, there's no effect on the trust services criteria or information services. Now, the only thing about office cleaning services is they come in at night, they have keys, they want to make sure they cannot access the servers. There's a risk because it could compromise security, but nevertheless, it's not as important as the subservice handles secure online payment processing that's large, continuous, working 24/7. Therefore, B would be, would most likely use the inclusive method for the subservice organization. What should you do now? You want to go to Farhat Lectures, look at the additional MCQs. That's going to help you if you're studying for your Information Systems and Controls exam. Good luck. Invest in yourself. Farhat Lectures is always here to help, and stay safe.